Wall Street's main indexes ended mixed on Monday as investors assessed the likelihood of a larger than expected interest rate cut from the Federal Reserve this week. The Dow added about 0.5% to close at a record high, the S&P 500 eked out a marginal gain, and the Nasdaq shed 0.5%. Market expectations on the size of the interest rate cut by the Fed after its policy meeting on Wednesday have been volatile in recent days, with investors currently pricing in about a 60% chance for a larger 50 basis point cut, according to CME's FedWatch tool.
To be honest with you, it kind of blows me away. It's kind of surprising.
Jason Betts, president of Redwood Wealth Advisors, still thinks a 25 basis point rate cut is much more likely than a 50 basis point cut.
I don't personally see that in what we've seen unfold in terms of real economic data, real earnings data, even what we've seen in terms of guidance from CEOs. Yes, we've seen some less stellar than hoped for guidance, but not, in my opinion, not enough to justify the Fed coming out blazing out of the gates with a 50 basis point cut.
Among Monday's stock moves, the S&P Technology Index, the best performer of the S&P's 11 sectors this year, was Wednesday's worst performer, losing nearly 1%. Shares of Apple, down 2.8%, were the biggest drag on both the S&P and the Nasdaq after an analyst at TF International Securities said demand for the latest models of the iPhone 16 was lower than expected. The demand concerns also weighed on chip makers, with NVIDIA, Broadcom, and Micron Technology all ending lower. But Intel jumped 6.4% after a report showed it qualified for as much as $3.5 billion in federal grants to make semiconductors for the U.S. Department of Defense.